Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to my video today, and as usual, please don't forget to like this video and subscribe to my channel. That will be really helpful and it does help out the YouTube algorithm. So it's been a couple of weeks since my last video. I'm sorry, I've been very busy recently. However, it is back to normal service, and I promise you I will try to provide you a stock and crypto update every week to try and give you some kind of clarity of what's going on in the market and talk a little bit more about my strategy personally, and also any key events that happened the previous week. Obviously, it's been very tough recently. I understand that the markets have been falling quite dramatically over the last couple of weeks, and I'm sure there's quite a lot of people that have been worried, have been anxious about their portfolio and about the economy as a whole. I just really want to give you some peace of mind that although the markets might seem very bleak at the moment and that there are troubles overall in the economy, I will not hide that. But I do think that we are starting to see some very attractive stock prices and also some attractive entry points in crypto. And I think over the long term, I think if you kind of persevere and that you are dollar cost averaging, and we are continuing to buy our core stocks and core stocks that we believe in, that we have a thesis on long term, that we will get the rewards of doing that later on down the line. So I'll get started. So if we look at our kind of performance last week, the market slumped really around the world last week again, like it has done for the last couple of weeks in the US and Europe, as well as the Chinese markets. Our portfolio was down about 1.5%, which is quite respectable when we consider what happened in the markets last week and how we compared with other key benchmarks such as the Nasdaq, which was down about 2.7%, and the S&P 500, which was down about 2.9%. We also look at the 𝗱𝗶𝗀𝗃𝗀𝗀 as well. That was down more than us at about 1.78%. And Bitcoin was marginally up last week, although it was only up by about 1.92%. If we look at how we're doing overall against the 2022 benchmarks, yes, I will not hide that it has been an extremely tough year. Not only for the market, but our portfolio whole, and we're down about 38.65%. We compare that to the Nasdaq, that's down about 32.4%, and the S&P 500 is down about 24.7%. I also wanted to highlight Bitcoin there, which is down about 58.51% for the year. So although we are marginally behind the Nasdaq, and we are quite considerably down against the S&P 500, I do think that we have a lot more upside potential than both of those indices, and we also have quite a bit of volatility in our portfolio, especially because of the crypto that we have in our portfolio. So it's not unexpected that when you have a downturn like this, that the risk kind of on assets such as crypto has struggled. However, it's not the first time that we have seen this, and I think it's been kind of proved over the long term that crypto, and especially Bitcoin, has very powerful forward-looking returns. Last week as well, I also did a number of short-term trades, which I use in order to try and reduce the volatility and try to book in some profits on a week-by-week basis. And last week we did some trades in ASOS, Lenovo, Synthoma PLC, as well as some trades in oil, the Nasdaq, and Varta AG. The majority of those were winning trades. We do occasionally have the odd losing trade, but that's just something that kind of comes with the ground when we're doing these short-term trades. And I think over kind of the long term, over a kind of a yearly period, it's working out a very good strategy, because it does allow us to kind of book in some profits, and our short-term trades are pretty profitable overall. If we look at the main news last week, so again, the markets are very dominated around sentiments regarding are we slipping into a recession, for example. Anything on interest rates as well is really kind of moving the markets, and obviously key data such as inflation data as well. Another key area which a lot of people are looking at as well is the employment market. We have had a historically very good employment market over the last kind of year or so. We're looking at very low levels. However, that is starting to creep up, and we did hear from some tech companies, especially Meta, who last week decided upon a hiring freeze, and we're starting to see kind of a technology slowdown, not only in the stock prices, but also in terms of their employment as well. And just the way that these companies work as well, they tend to work in tandem, and they tend to kind of benchmark against each other in terms of hiring and benefits and perks, etc. So it is quite likely that we'll either see hiring freezes in technology over the next couple of months, or even worse, we could see some higher than expected layoffs. We also had the hurricane last week in Florida, which caused quite a lot of devastation. So thoughts go out to anyone that was affected by that. Also, we have seen a really strong US dollar strength over the last couple of months in particular, and that is mainly because of the Fed actions in terms of increasing the interest rates as high as possible and very quickly. And this has caused a very strong US dollar because of what's happening in the market as well. We've also seen a lot of people, especially hedge funds, they've kind of had a lot more cash in reserve, and they've kind of flight to safety in terms of US dollars. So we've seen the US dollar really strengthen against the pound, as well as the euro and the Chinese yuan as well. So it's a situation to watch, and there's something going on there in terms of the dollar milkshake theory, which seems to be playing out quite strongly. And there's a lot of kind of countries at the moment are trying to do whatever they can to try and possibly strengthen the currency against the US dollar, because this is causing them a lot of problems. Also, we've seen some major issues with some major banks, such as Credit Suisse and Deutsche Bank, especially Credit Suisse, and its the share price has really plummeted recently, and there is a lot of inside signals that Credit Suisse are having financial difficulties, and this kind of brings everyone back those memories, that PTSD about what happened with the Lehman Brothers in 2008, and could that be on the cards again, and whether a potential bailout might be required in order to support that. Still early days in there, and we'll see a lot of messaging coming out on that fact over the next couple of weeks, I'm sure. We also saw the UK government this week. They actually have been forced into buying bonds, which are called UK gilts in the UK, and they've done this in order to stabilize the market, because there was an extreme amount of concern that a lot of pension funds could be running into quite a lot of liquidity issues, and this has really forced the UK government's hand in order to buy bonds at whatever it takes in order to be able to stabilize that market. And I know there's a lot of countries such as the US who are looking at this and saying, is this potentially our future as well? The UK last week also announced plans for tax cuts, energy subsidies, because obviously energy costs have gone up so much over the last couple of months in the UK and in Europe, and they're talking about trying to do some energy subsidies, but which also has an effect, of course, on inflation. So this could really increase inflation by providing these energy subsidies and increase borrowing. Within that plan as well, there was also plans to remove the highest tax brackets in the UK. And this is kind of in line with the new Prime Minister's kind of trickle-down economics type policies. However, just today, it's actually been announced that they have decided to withdraw that plan that they had after there was a huge amount of backlash, and also the IMF also in uncertain words last week also said that they didn't advise against it, and you should look at potentially revising that policy that they had in place. So they have listened, and now it's going to be reinstated, the highest tax bracket. We're also hearing echoes from the Bank of England that says no emergency rate hikes will happen at this current time, which many people in the markets were expecting. However, we're expecting a much larger rate hike expected from the Bank of England in November, when the next rate hike is expected. The last one was at about 0.75%, and it is expected that the next rate hike could be as high as 1.5%, because obviously inflation has not yet peaked in the UK and in Europe in general, and also they're having to put in place other things such as these energy subsidies, which is going to put further pressure on inflation as well. So things aren't looking too great in the UK. The ECB has also said that they will continue hiking interest rates at least for the next several meetings. Christine Lagarde, who's head of the ECB, has said that she has seen diminishing data that's happening, deteriorating data that's happening in the markets in Europe, and this is leading to some concern. However, obviously inflation is still very high, so it is expected over the next couple of meetings that they will continue to increase those interest rates. And as I said, we've seen Eurozone inflation is accelerated all the way to 10.1% in September, and that is from the 9.1% the previous month. So we have clearly seen that inflation has not peaked yet in Europe. However, I do expect that we have peaked in the US, and that Europe and UK will peak much later. We've also seen in China, the market slumped last week, and we've seen officials are really trying to step in to slow the currency slide against the US dollar. And it's actually warned its participants in the country against betting on the yuan currency, so not to short the yuan currency. When China says stuff like that, they really mean it, and they say it with an iron fist. And it's also told banks to really start to prepare to sell the US dollar reserves that they have on hand in order to try and prop up the Chinese yuan against the US dollar over the next coming weeks. So they are really trying to defend their currency. If we look at our top 3 performing stocks for last week, and the top performing stock for last week was Bluebird Bio, and that was up about 12.63%. The second best performing stock in our portfolio last week was ProPetro, and that was up about 8.2%, and that was on the back of a good earnings report. We've also seen quite a lot of strength recently from WIX, and it is our third best performing stock of last week, and that is up about 7.65% for the week. We now go on to our Death by Chart series. If we look at the chart to the left, we can see that we are at the highest federal funds rate since January 2008 at about 3%. As you can see, this is quite a high rate, and it's the highest that it's been for quite a long time. So we are in not uncharted territory, but territory we haven't been faced with for a long time. And it's clear that they have to continue to increase those federal funds rate. And it is actually predicted that that could go up to, you know, potentially go up to 4.5 over the next couple of months. If we also look at the Fed balance sheet, not only is it the mandate of the Fed to try to lower inflation and keep those interest rates rises kind of gradual, it's also part of the mandate to try and reduce the balance sheet during key times, especially during times of inflation. And as we can see, it's actually, since it actually peaked the balance sheet in April, it's actually reduced by 14.9 billion from its April peak. So they are chipping away at that balance sheet, but it's going to take a lot more time and effort to significantly reduce it. So as I was saying, on the market expectations for the Fed funds rate, if we look at the basic Fed funds futures, we can see that the market is actually pricing in that the peak of the interest rate should be at about 4.61%, which they are estimating for March 2023. And then we see that gradually going down to January 2025, where it's expected to be at 3.58%. You will note that it's still significantly higher than the 2%, which is the long-term Fed's interest rate target. But it would take a very long time to get there, and I think that's very ambitious. And I think that the Fed would probably take 3.58 at this current time. If we also look at the cost of increasing those interest rates over time, obviously, if you increase the interest rates, the expenses of US public debt outstanding increases with it, because obviously there's more kind of interest payments, etc. And as you can see, it's actually risen. That public debt outstanding has actually risen to over 716 billion recently. So we can see that that is having a real strain on the economy. As those interest rates are rising, it's causing it being much difficult to pay back that dollar debt. So if we moved on to our crypto news and views segment, and I explained a little bit about what's happening in the crypto market. Well, actually, over the last couple of weeks, it has been very flat, to be honest. And we are sitting just above 19,000 at the time of making this video. As I've said before, we have been in this range for a very long time. So today is actually the 112th day that we've been sitting in that 18.5 to the 24.5K range. And it's actually been several months since we hit that bottom. And we've been skirting very close to it over the last kind of couple of weeks at that lower end of the range. But it seems to be holding on pretty well, especially when we consider what's happening in the macroeconomic environment as well. It's kind of holding up. And what we are starting to see, which I'll explain a bit later, is a decoupling against the stock market. but sometimes that is some lagging data as well, which takes some time to play out. We also have seen the Department of Justice has submitted an objection to Celsius motion to reopen withdrawals. Celsius put in a plan to try to provide funds back to the Celsius customers. However, that's been blocked by the Department of Justice because they say it's too early and that they need to submit all their plans first, and it needs to all be worked out before you make kind of some of those drastic actions to try to pay back customers. So I can see that being significantly delayed. We've also seen quite a lot of movement recently in the SEC case against Ripple, in which it was actually the judge in the case ruled last week that the documents written by the former SEC Finance Division Director William Hinman ruled that they should be released. There's said to be some quite incriminating messages in there in terms of emails, which obviously such things as they gave Ethereum a kind of a free pass and said that they weren't a security. Also some past communications with Ripple to say that they were potentially, working within the confines of the regulations at that given time. So this is very kind of key into this kind of Ripple versus the SEC case, and is actually expected a ruling will be made over the next couple of months if a settlement is not done before then. But this is a very key point. We've also seen that USDC will make itself compatible with Arbitrum, as well as Cosmos, Near, Optimism, and also Polkadot. This gives more utility to USDC as it's able to be able to move on more network rails. So I think this is a pretty good thing for stable coins and also for crypto as a whole. Obviously this year we've seen very volatile crypto prices, and they've been moving a lot to the downside, and the volume really kind of dried up 4 to 5 months ago. However, we have started to see those volumes on crypto exchanges increasing and growing. In September, we had an increase of about 16% in crypto volume. And I think that this is just kind of a natural part of the crypto cycle when we kind of come towards the end of the bear market, where people start to see these kind of low prices, and especially smart money such as funds, etc. They start to kind of try to buy the bottoms of the crypto markets, and they see some good deals on the horizon, and volume starts to increase. So overall, in terms of crypto, I think that we have either hit a bottom or we are at least very close to it. But we always need to be careful because there is a lot of things that's going on in the macro economy at the moment, which could also have effect on the crypto market. I'm using this time to, as we see really low prices, I'm using this time to try and gradually, but in a risk assess way, increase our crypto holdings, because I believe that there's a lot less risk when the prices are low than when we are at all-time highs, where everybody gets really excited, but is actually probably the highest risk time. If we look at kind of two charts, we look at the chart to the left. This chart is actually showing us that very recently that Bitcoin is starting to decouple from the S&P 500 and also the NASDAQ in particular, which it was very highly correlated to before. And this could be the early signs that we are starting to decouple from the overall stock market in terms of for crypto. But it's worth watching that kind of over a longer term period as well, and especially if there's any macroeconomic shocks. But it's a good starting indicator. We also, another good indicator of whether we have hit the bottom potentially in Bitcoin is the number of Bitcoin supply underwater in history. And actually in the last bear market, we actually saw that at about 60% of traders were below water in 2000, that kind of 2018, beginning of 2019 period of the bear market where it was at its lows. This was actually a turnaround for Bitcoin. We're not that far off these levels, and this is a good sign that I think that there could be potentially a lot of buyers in the market who are accumulating slowly to try and lower the cost basis. So all in all, I think it points to the fact that we could either have hit the bottom or be very close to the bottom. So it's all about just trying to stay as patient as possible. All the hard work, and I want to say this again and again, all the hard work happens in the bear markets, okay? The bull market is where you collect those gains and you start to take profits, etc., which I did during the bull market. And the majority of the money that I've made in 2018 and 2019, although that was only really collected in 2020 and 2021 when those long-term crypto bets that I actually had came to fruition, because I was doing a lot of the hard work during those bear markets to find out what the best projects were, what was potentially underpriced, and really taking advantage of those opportunities and having that kind of iron stomach that you need to, that uncomfortable feeling in your belly that you need to have in order to push the buy button during some of the darkest times. But mostly the trades that I have made where I have that uncomfortable feeling, where it is very difficult to pull the trigger on a trade, and there is a lot of fear in the market, that is generally the best time for us to invest, even if we haven't hit the bottom yet. So please stay patient with the copy, and if you have a chance, you can dollar cost average into your copy, which will allow you to get a lower cost basis on your copy and get into profit a lot sooner once the markets turn around. I don't want to short this market, both on crypto and also on the traditional stock market at lows. As I said, I think it's more dangerous. I get a lot of people saying, why are you not shorting the NASDAQ now? Why are you not shorting the S&P 500 now? And I just don't see, I see it as being very dangerous, and I don't see really that much upside potential from doing that. And I think that the market is quite asymmetric as well at the moment to the upside. And I think I'm much better served to slowly lower my dollar cost basis on some of my core positions. So thank you very much for listening to my video today. And if you're not already, please join my Discord group. There's an invitation below where you can chat with a big group of like-minded investors who are going through the same things as you right now. So please join that group if you haven't done already, and have a great week ahead.